India Inc. went into a state of disbelief after Satyam's founder chairman Ramalinga Raju admitted to being guilty of committing fraud to the tune of 7,800 crore rupees. The magnitude and the gravity of the scam shocked the national conscience. A perfect example of crony capitalism, this Satyam fraud was yet another familiar case of a nexus between politicians and corporate houses that needs to be cracked.
Andhra government has favored him and given him enormous tracts of land and given him lots and lots of contracts. Metas was really built up on government contracts. But that is a story which is much more common all over India. The nexus between local politicians and local rich people.
Satyam may be just one case that has been exposed, but there could be many more feeding off the corrupt system yet to be unearthed. Experts feel that these malpractices could expedite the collapse of the economy and have a ripple effect on the industry and affect the country at large.
To move from this particular regime of corporate governance to an enterprise governance, which will lead to much more transparency, bring in the measures of efficiency factors in that instead of only a checklist mentality.
The Satyam fraud has already shaken the confidence of the investors and the economy, but more importantly, what is bothering is the government's ineffectiveness to stem the corrupt practices of crony capitalism that could have a debilitating effect on the country's economy. Stricter adherence of the corporate governance norms and clarity in the direction of operations is clearly the need of the hour. But what needs to be stepped up is the thought over the ethics to bring about a better society. Mehul Verma, NewsX, Delhi. There has been a flutter after a recent World Bank report criticized the NREGS as a policy barrier for migration. Though a day later, the World Bank clarified the program plays an important redistributive role, it still brings back focus on such rural programs. Time and again, such policies have come under criticism for benefits not reaching the intended recipients. Often there are allegations of diversions of funds by the party in power with only a fraction reaching the target groups. As Prime Minister Rajiv Gandhi had once said, only 15 paise of every rupee reaches the people. Recently, after a tour to some rural areas, his son Rahul went a step ahead, saying, "After seeing the situation, I feel not even 5 paise are reaching the people." But the UPA government has been going big on allocations on such rural schemes. In the interim budget, plan allocation for NREGS was increased from 16,000 crore rupees to 30,100 crore rupees, a rise of 88%. Bharat Nirman scheme got an outlay of 40,900 crore rupees. Last year's farm loan waiver package drained the government exchequer by 60,000 crore rupees. Some experts say the problems lie in implementation.
I would say that I wouldn't call these programs ill-conceived or not good. The whole issue really comes in all these programs is really implementation. How effectively they are, the idea may be good, but how well are they executed?
Direct cash transfers is seen by some others as a more transparent way to implement social welfare schemes.
In general, I would say that the best thing to do would be to give the same amount of money to every citizen. Let's say the government should give each of us a 5,000 rupee note.
In times of a slowdown, as every rupee counts, such wasteful public spending invites criticism.
The government has finished off $50 billion out of the $300 billion it had in 6 months. And if it continues like that, it may finish off all the $250 billion, maybe in a year or two, in which case we'll then have a crisis and then we'll have new reforms.
In the absence of a system of state funding of elections in India, such public schemes are often seen as a tool for the ruling parties to generate money through the back door. Till the system changes, like in some countries in the West, public good will remain a far cry. Mehul Verma, NewsX, Delhi.
The government announced the second fiscal stimulus package on Friday with focus primarily on the infrastructure, export and micro, small and medium enterprises sectors. While announcing the slew of measures taken by the government, Planning Commission Deputy Chairman Montek Singh Ahluwalia said that Indian economy will grow at 7% this year.
And I think an average growth rate of 7% for the current year would be quite a good performance. Now, let me say that in the first half of the year, the GDP growth is already 7.8%. But the slowdown in the global economy and its impact on exports, etc., has been really felt in September and October onwards.
The package hopes to give a push to the infrastructure sector. To begin with, the government has removed ceiling on cost for external commercial borrowings via approval route. This will allow easy access to funds for the Indian infrastructure companies and realty companies. The non-banking finance companies have also been allowed to raise funds abroad through ECB route for integrated township projects. The government has also earmarked a staggering 25,000 crore rupees for a special purpose vehicle for the NBFCs. This will result in setting up of a new financial institution to facilitate infrastructure funding. Banking and state governments have been given more room to lend and borrow to spend more on projects facing liquidity crunch. State governments can now raise additional funds to the tune of 0.5 percentage point of their GDPs. The measures have raised concerns on fiscal discipline. Ahluwalia though feels this is a non-issue.
Let me say that when you want a fiscal stimulus, one of the ways of giving a fiscal stimulus is to have less revenue. So I don't think you should view the 40,000 crore revenue loss as something that has happened inconsistent with government policy.
Exporters have also got attention from the government. State-level bankers' committees will hold special monthly meetings to oversee on the issue of credit crunch for micro, small and medium enterprises. Department of MSME and Department of Financial Services will jointly set up a cell to monitor progress on this front. The guarantee cover extended by the Credit Guarantee Fund Trust will now be increased to 85% for credit facility up to Rs 5 lakh. This can benefit about 84% of the accounts accorded guarantee cover. Exim Bank has also been provided a credit line of 5,000 crore rupees for it to lend to exporters for pre- and post-shipment credit. A proposal to recapitalize the public sector banks has also been taken. The government has declared that this is going to be the last set of fiscal measures to be taken in this financial year.
The second economic stimulus package makes an attempt to create a greater level of credit flow into the economy. Bringing cheers to the export, auto and the infrastructure sector, this package hopes to relive the after effects of the global economic slowdown. But the larger question of the existing home loan takers reeling under the high interest rates still remains unanswered. Mehul Verma, NewsX, Delhi. The RBI's announcement of cuts in its short-term lending rate or repo rate and reverse repo rate has enthused the industry, but only partially. It still thinks these are half measures and a lot more is needed to get over the crisis of currency and confidence. While announcing the cuts, RBI Governor D. Subbarao remained silent on cash reserve ratio or CRR and statutory liquidity ratio or SLR.
A little disappointment. Cash reserve ratio. Could it have been cut a little more to add little more liquidity? The Reserve Bank Governor said 300,000 crores have already been given, but we know that there is little more liquidity required. SLR, statutory liquidity ratio, was cut earlier. Could it have been cut a little bit as another signal?
The RBI rate cut is aimed at re-energizing the sagging economy, particularly in manufacturing and infrastructure sectors. But experts caution it may not be an easy task.
I don't think the slowdown will completely stop because there is really more work to be done. I also believe that the real impact will be felt when this benefit of this goes to the consumer, which is that the banks actually reduce the rates.
After RBI's latest measures, all eyes are now on Prime Minister's stimulus package that is expected to be announced soon in phases. The government is relying on this combination of monetary and fiscal measures to do the trick in the troubled times. With the cut in repo and reverse repo rates, the economy is now positive about a softer interest rate regime. And this will not only boost the investment sentiment, but also pamper consumer spending, buoyed by easing inflation. Mehul Verma, NewsX, Delhi. After the left parties hinted at a scam in spectrum allocation under 2G policy, Telecom Minister A. Raja said he will resign if charges of violating the law are proved. Addressing a press conference on Friday, Raja said the recommendations of the Telecom Regulatory Authority of India were followed in letter and spirit while allocating the spectrum.
See, as per the NTP 99 and the TRAI recommendations and the license conditions thereon, clearly and categorically states that 2G should not be action and it must be done on the basis of the allotment. The reason behind is, it is not only the intention of the government to extract more money from the 2G operators, they have to go for the penetration of the rural India.
The CPIM raised the issue after the new telecom companies Unitech Wireless and Swan Telecom sold stakes to foreign telecom companies for an estimated 5 times the amount they paid as license fee to the government. The left parties have demanded a probe, alleging that the allocation has led to a loss of 60,000 crore rupees to the exchequer.
With the procedures for the 3G spectrum that is coming in, that we must first of all treat this as a national resource, like your mineral wealth. Spectrum is also a similar wealth. And therefore, the maximization of this national wealth for the nation must be the priority and not your freebies that you're giving to the corporate sector.
With elections round the corner, this controversy can cost the UPA government dearly. It can also have an effect on the further sale of spectrum. Despite the government dismissing any policy decision over the cabinet approval, the spectrum allocation task seems to have run into non-transparency issues. And this will not only impact the revenue flow to the government, but also the much-awaited 3G spectrum to the nation. With Chutapa Paul, Mehul Verma, NewsX, Delhi.